I think there are other indicators which we follow like ADX.
Okay.
It's a brilliant indicator. I call it as the king of all indicators.
What is that?
So it's average directional index.
Okay.
It's a simple tool, but it's a little complicated when you plot this on charts. Okay, but for someone who, so it's like the ECG graph.
Okay.
So for a layman, it becomes very difficult to read. Right? But for someone who's experienced enough and who has a keen eye, he would know what patterns you're looking out for. So it's same or very similar to that. But I think that's a fantastic tool. It helps us gain different kind of experiences in trading.
Hi everyone and welcome to Market Pillars Uncovered. This is an educational series where we deep dive into the minds that are shaping the financial and business world in India. Our guest today is Mr. Kunal Bothra. He is a SEBI-registered market expert. He deep dives into technical analysis. He's had over 15 years of experience and he's also been an MBA as well as an engineer. He has over 2.5 lakh investors and has advised over 6,000 plus premium clients and has conducted over 3,000 plus webinars. So in today's episode, we'll be understanding the outlook on the Indian markets, what the outlook is on technical analysis, risk management, research parameters, and so much more. Kunal, it's so great to connect with you after so long. Let's talk about the key trends in the markets today. What exactly are some of the important technical trends that are supporting the Indian markets? If we had to look at the journey of the Nifty, tell us a little bit more historically about how it's been performing.
First of all, thank you so much for inviting me for this Money TV show. And again, interacting with you, I think since last so many decades has been a experience of sorts. Coming to the first part, which is trends. I strongly believe that trends in terms of the market parlance, in terms of technical analysis, is more of understanding behavior, behavioral patterns. So, like for example, when we saw the post-COVID rally for the markets, it was a change of behavior. It was a fighting spirit which was coming back for the human race as such, and that led to a resurgence of the overall markets across the globe. So, I believe that with that kind of a behavioral trait, we analyze trends based on technical indicators. The beauty about technical analysis, Avan, is that almost for all different kind of behavioral traits, there is an indicator. If there is a greed in the market, there is an indicator for that. If there is fear, there is capitulation in the market, there is a specific indicator for that. All we have to do is just try and assess which part of the market you believe that the markets are in, try and map those indicators, and we get the the crux of the overall trend. So the idea is to analyze trends, we understand the language the markets are showing. If we understand that language of the market, it helps us decipher and ride the trend going forward. For example, in this last 5 weeks, we've had 5 weeks of consistent correction. Now, this comes at a point when there is a global bull market already there. US markets, European markets, Shanghai, Nikkei, I think most of these indices have already hit new highs or on the verge of doing that. Our markets have in the last 5 weeks struggled. Now there are multiple reasons for that. The dollar index going up higher, and then the Nifty constituents being a lot more weaker. So the idea is that to ride big trends, you have to analyze what's going on in the market at that point of time. Based on that, we decide and then decipher at which point do we have to take risk and enter into the market so that we can ride the next upcoming trend for the index.
I think people generally associate technical analysis with it's going to be a very short-term trend, it's going to be a trading bet. Can you just bust some of those myths and tell us a little bit more about the difference between short-term and long-term trends as well?
So it's a fantastic question. And so this is a stereotype image that technical analysis is more of trading. Over my last 20 years of experience, Avan, I've seen technical analysis growing as not just a tool for short-term trading, but as more of evolving trends on long-term charts. Because price, we say, is the ultimate Bhav Bhagwan Chhe. So price is the ultimate tool, which, so if there is an information which comes into the market, if there is a risk, a suspense over which like the tariff outcome came out. So with all those events coming out, the impact of that happens on prices. And the prices are the ones which tells you the sum and substance of overall market scenario. So if the prices are moving up higher, devoid of all negative news flow, it tells you that the long-term trend is bullish for that particular stock or an asset class. So like what happened with gold, silver, and then many of the asset classes. Technical analysis as such, I think, is more fungible. with both short term and long term. You know, I always believe that आप जो ढूंढना चाहते हो market में वो आपको मिलेगा. If you're looking for short term trading, you will get short term returns.
Okay.
You can look at technical analysis as a short term trading tool. If you're looking out for, say, multi-baggers and long term trends, looking to ride trends which last for decades, then there is a tool, there is a specific study for that as well. So it depends on what you're looking out for.
I think clients also really praise your disciplined risk approach. Can you tell us a little bit more about that philosophy and how it works in very volatile markets also?
So again, a beautiful question, because I think risk is the most important parameter which we associate with trading, investing. Risk to me, I believe, is not just a rule. It has to be a religion, right? So because, for example, with every outcome of the market, every stage of the market, there is some sort of a volatility which is attached towards that particular phase of the market. Now, risk for me, I pursue, is that something which should not kick you out of the game. So because if you're out of the play of the market, then the risk capital goes off and then you can't come back into the market. So there are 4 steps which I believe that every individual should be looking out for in terms of risk parameters, which I follow very rigorously.
Okay.
One of them, and the first and the most important one, is capital preservation.
Okay.
Like, so in simple mathematics, if a stock goes down 10%, if a portfolio goes down 10%, to recover, you need 11% gain.
Okay.
If a stock goes down 50%, you need to have double returns.
Understood.
Right?
Okay.
So the most important one is your capital preservation is the extreme important tool. So you don't have to come to a point where the capital goes down so sharply down that to recover takes a lot of time.
Yeah.
The second, the most important one is stop loss.
Okay.
You know, stop loss should not be considered as a fear factor. It is something which tells you that, okay, fine, the theory which you had, the premise which you had built for taking a particular strategy or an investing tool, that premise has not worked out, right?
Yeah.
So it should not be something which should be hurting to the ego of every trader or investor. The third, the most important one, which I believe, is that position sizing is the most extreme tool which one has to use.
Explain that to people who don't
You
know
cannot
what that
control
is.
the outcome in the markets, but what you can control is the exposure which you have.
Okay.
Right?
Yeah.
So if I am not certain about a particular scenario of the market, okay, I don't need to bet heavy.
Okay.
Okay, I need to bet very light.
Okay.
Because I want to ensure that if there is a certain, it's like in test match, like the 4th test match.
Yeah.
If the pitch was a bit wobbly, then India played for a draw.
Yeah. You're cutting your losses.
You're cutting your losses. You're ensuring that you don't let the wickets go out.
Yeah.
But you want to elongate the time period where you just want to bat out.
Yeah.
So that's the phase which one has to be looking out for, as the most important part, which is the position sizing. Fourth and foremost, markets are dynamic. Volatility is something which is part of every trader investor. A trader gets kicked out maybe 3 times or 4 times in a year. An investor faces losses once in 4 years.
Yeah.
So volatility is part of the game. Okay, you have to adjust all your framework of risk appetite and discipline so that you can adjust your systems and your parameters to the current market volatility.
Okay, that's very interesting to understand the 4 pillars that you look at. But I was just talking about this in a previous interview, that there's so much research out there, there's so much data, there's so much information. What are the main indicators or lesser known parameters that you think are critical to monitor before investing?
So, there are a lot of tools which we have developed over the last 20 years. When I started off learning technical analysis or trying to pursue this course of this stream of technical analysis, there have been a lot of indicators which we've, actually mined, developed and created. Now, the first and the most important one is there are various phases of market sentiment. For example, fear. Now, fear leads to capitulation, leads to extremely bottom, prices, where everything is very cheap. So the best way to gauge fear is market sentiment. Now there are 2 very famous indicators. One is put call ratio, very easily available, but something which not many traders follow.
Okay.
Right? The second and the most important one is what we've created as a market breadth indicator.
Okay.
Okay, because as I said earlier, that the impact of whatever is there in the market right now happens on the stock prices.
Yeah.
And once the stock prices, so imagine if all of the stock prices, if all of the stocks within a particular index goes at a particular point, so all of them are below their moving averages and below a particular threshold point, we said that the markets are extremely oversold.
Yeah.
Now when your back is behind the wall, there is all the more strong chance that there's going to be a bounce back.
Yeah.
Right? So that's the market breadth indicator which we follow, that helps us identify the contrarian and the fear zones. Then there is a zone where there is too much of greed, euphoria, right? So we look out for indicators where relative strength comes in, RSI comes in, and I think there are other indicators which we follow like ADX.
Okay.
It's a brilliant indicator. I call it as the king of all indicators.
What is that?
So it's average directional index.
Okay.
It's a simple tool, but it's a little complicated when you plot this on charts.
Okay.
But for someone who, so it's like the ECG graph.
Okay.
So for a layman, it becomes very difficult to read.
Yeah.
But for someone who's experienced enough and who has a keen eye, he would know what patterns we are looking out for. So it's same or very similar to that. But I think that's a fantastic tool. It helps us gain different kind of experiences in trading. And the last and the foremost is RSI. So not just a normal RSI. So I'm sure many traders, I think most of the traders who start off learning technical analysis, they start with RSI. But over the last decade and more, we've tried to just flow out the weaknesses of a normal traditional RSI. We developed something called as a modified RSI.
Okay.
So it has all the nitty-gritties of an indicator.
Okay.
But devoid the most important point, which is whipsaws.
Okay.
A normal RSI has too much of whipsaw.
Yeah.
A modified RSI has the least amount of whipsaw.
Okay.
And it helps us to write trends.
Okay, great. So a lot of indicators that you look at. Now, if you had to look at the markets from the standpoint that we're currently at, what is your projection or what is your outlook long term? If you had to map it out, could you share something on even the Indian economy? I never thought I'd ask you this question, but here I am today.
So I think India is now at a stage where from a potential, I think we are now in the performance kind of a category.
Yeah.
Right? So right now, over the last, I think 5-7 years, there's been an explosion of various new sectors. Defense, for example, is one of the biggest sector, right? We've seen Fintech, digital banking, I think is the other important sector. So there are a lot of new themes which have evolved. I strongly believe that in the last 5 years, I think our country has seen a major transformation, which is not just a very short-term oriented transformation. This is something which is going to last for hopefully the next many decades to come by. I also believe that with this current landscape, the political landscape which we are in, the demographic dividend our country favors, I think all of that is extremely positive for our markets right now and for the Indian economy. I strongly believe that there are going to be a lot more emerging sectors in the next 5 years, 10 years, something which we've not been seeing over the last maybe 10-15 years of the markets.
Okay.
For example, there has been digital banking, defense, aerospace.
Okay.
Right? There have been so many new innovations which have happened into many of these spaces. So in Nifty 50, there was a classic example that I think 2008, 2007, there were only I think 4 or 5 stocks in the Nifty 50 which are still there in the current domain of Nifty 50. So the index remains constant, the constituents keep on changing. Okay, that happens with every growing phase of the economy.
Got it.
One very important point is, the first line of market when anyone wants to learn market is, what is stock market? It basically is the progress of human race.
Yeah.
So over the last 50 years, 100 years, human civilizations have grown.
Yeah.
With AI and with so much of technology, I'm sure the next 50 years, 100 years, the human civilization will be at a different level altogether. So the markets have to map the growth of human race.
And what is your projection on the index and where we are headed?
So, in 2014-15, we came out with the Fibonacci theory on the cycles of, Fibonacci, which is there on the Nifty chart. And according to that, Fibonacci theory, to put it very simply, I think we should be looking at least 30,000 to 35,000 kind of a Nifty over the next 5 years. That to be more conservative.
Being conservative?
Being conservative.
Oh, wow. Okay. Good to know. And I also, you touched upon a few sectors, but if you had to nail it down to say the top 3 most exciting sectors for India, maybe it could be some that are undiscovered as yet or not really tapped into, which would they be? So
I think something I just flagged off, defense, I think is one of them. I strongly believe that, what we are looking out for is the next 5, 10, 15, 20, maybe more than that kind of years, where many of these stocks, some of them, so it's not just the traditional defense names which one should be looking out for, but even, there could be other, stocks within the space.
Okay.
To give an example, I think TCS was listed after Infosys, post the IT boom. But TCS is now commands the highest market cap. amongst the IT pack.
Yeah.
Just to give an example.
Yeah.
So it's not necessarily that when the birth of a sector happens, that the stock which is already present in that sector becomes the leader sector, leader stock in that particular sector. So there's bound to be a point where over the next 3-5 years, there could be new additions which could happen into those particular sectors. Fintech, I believe, digital banking is something which I'm bullish on. And then the traditional sectors, consumption, FMCG, etc.
Okay. Do you, for those investors who do see a lot of opportunity in mid caps, is that an area that you would be quite focused on? What is your advice to those who are looking at mid cap investing?
See, Aman, frankly, this depends on the phase at which one starts off his journey in the market. If you're starting at a point, for example, in say previous year, 2024 September, then the better cushion would be to have more large cap oriented exposure. There comes a point in the market when there is a correction, when there is a a sharp drawdown in the market. That's a time where mid caps look very attractive, right? So I always believe large caps are something which helps you gain constant returns. But mid caps is where the outperformance lies. But if you time it perfectly, right, with the classic combo, that if the mid cap index, for example, if it's down 30-40% at any point of time, right, there'll be many quality mid caps which will be available at very cheap prices. That's the time where you have to have a slight higher exposure
to the mid caps. Okay. You spoke about AI and things like that, and then so many of these parameters, so many things that I have heard of, but maybe people don't know about. Are you now leveraging AI? Are you seriously using it as well in your technical trends and analysis?
Absolutely, yes, Aman. In fact, that's keeping me a lot more busy over the last many weeks. Because to try and even a simple coding of a technical tool, right? We used to do it in the traditional tools of Excel and so on and so forth.
Now life has become
so much easier. Now you just need to have an idea. You just throw in the idea, put it into a command on an AI, and the results and the output gets generated within a matter of, I think, few minutes.
That's amazing. Any other advice that you would have for investors when they are looking, like say someone is looking to get into this field or someone is looking to use technical analysis as a way of trading? What would you tell them, or investing? What would you tell them?
See, I think technical analysis is just one stream of the market. So for someone who wants to enter into the market and understand, it's very important. So like, for example, again, giving an analogy of cricket, you can't be specialized towards one stream of, there are different versions of cricket right now. Right? In the same parlance, there are different versions of market. There is fundamental analysis, there's technical, derivatives, algos, etc. So all you have to do is you have to first understand that who's your maybe a competing audience or who's your counterpart in the market. First you understand the game over there. Once you understand that, then you can start mastering the tools for technical analysis. No indicator is a holy grail indicator, right? Indicators will work for a certain phase, for a certain period of time. And that's where the patience of every analyst or an expert investor trader gets tested. Because there will come a point where your indicator or whatever tool you're using will not work. Now, if in that domain, if you start saying that I've used the wrong indicator or I've used the wrong system, right? So that may not help you grow into a mature trader. All you have to do is that this is a phase of the market, that indicator is not working, and then you have to ensure that once the phase comes back again, you try and encash as much as possible.
Absolutely. I want to know more about your journey, Kunal. Was markets always a focal point? Was it something that you were attracted to at a younger age? Have you had many disappointments along the way where you've thought of maybe giving up? Tell us about your milestones.
It's a very interesting topic. It makes me nostalgic, Avan, because 20 years back, I had just very little and a very middle class oriented education background. Now the idea is I started off in 2007, 2006-07 in the field of markets, where I completed my MBA and then in finance, and then moved on to the world of markets, stock markets as such. That was a time when markets were roaring. 2007-08 was
the bull run.
The bull run, right? Every week, every 10 days, you used to see Sensex rising 1,000 points.
Great time to have started.
And then we saw the 2008 crash. So, I believe that the start which I had got in my first firm, which was at Edelweiss, was literally amazing. Because for the first 3 years, not just the markets rewarded and then helped us experience, but it was the kind of grinding which we had gone through in the first 2-3 years, which I think every individual has to go through. We learned about world markets. We learned about so many different strategies which are there in the market domain, options, fundamental analysis, special situations, and so on and so forth. We did all of that extensively, right?
So your foundation was strong.
Foundation was very strong. And then eventually after 3, 4, 5 years, I realized that there is, with my engineering degree and the skills which I had, I thought maybe I could visualize the charts and forecast the charts pretty well. So I started off learning technical analysis, and then over the next 5 years, 7 years, this grew into not just a passion. I think this grew into a different level altogether for me. And then I think over the next 10 years, 15 years so far, I think it's been an exciting journey. I always believe that experience is the biggest teacher, right? So all kind of tools, analytical skill sets which you have will get tested in the market, right? In every phase of the market. All you have to ensure is that understand as many indicators as possible, right? It's like a surgeon, right? Who's doing a surgery. You need to have different understanding of different tools. You just need to use the right tool at the right time.
Got it.
If you can gauge that, then I think you've understood the language of the market.
So Kunal, when we're not seeing you reading technical charts and using AI, what is it that's keeping you busy? Or any hobbies, passion?
Quite a few. Reading is my first hobby. I love reading. And not just the normal market related or business related. I love reading fiction. I love reading psychological books.
Oh wow!
Right. I love reading that. Cricket is my passion. I'm a big cricket fan, and apparently I think Sachin was my idol. But post his retirement, I saw his last match also in Mumbai. Okay, and of course very emotional at that point of time. But then I think post that I've been sort of an okay follower for cricket. But I do play cricket quite a lot.
Amazing.
I do spend a lot of time with my family, with my kids. And I love bringing them up. That's about it.
Amazing, Kunal. It's been so insightful to understand so much more about your journey, and you've really given very practical advice that investors can use in terms of not just putting your eggs in one basket, knowing all the indicators, and also having the, knowing that you can't, you need to bear the markets, and volatility is part and parcel of the game.
Absolutely.
So that was Kunal Bothra, and I hope you enjoyed watching this episode of Market Pillars Uncovered. Do remember to subscribe to Money TV, and do you have any questions or comments? Do share with us in the comments section below. Thank you for watching.